Hey guys, this is Dave. Welcome back to another video. If you haven't been around the channel too long, you might not realize that I actually have a fairly large position, at least for my portfolio, it's large, in Tesla. I know I mostly talk about space stocks, but do hold a fairly sizable position in Tesla. And the reason I haven't really talked about it too much, like I casually mention it every now and then, but there haven't been any dedicated Tesla videos because there's already so many YouTubers out there covering Tesla. There's a lot of really great guys like, Rob Maurer, Dave Lee. There's a whole crew of them. So I just wasn't too sure if I really was able to add anything to the space. But these Q2 results I found extremely interesting, so I wanted to go ahead and make a video about it anyway. I am finding that there seems to be a strange crossover between people who invest in Rocket Lab and people who invest in Tesla. Maybe it's just we kind of have similar profiles of going for high growth stocks. But yeah, a lot of the people I talk to down in our Discord or in the comments also own Tesla, interestingly enough. So I thought you guys might find this video interesting as well. By the way, if you haven't checked out our Discord server, there's a link down in the description below. It is a great place for us to hang out and talk stock, so I hope to see you there. With that out of the way, I just wanted to go ahead and dive into some data around Tesla's Q2 results and the earning call that followed. All right, guys, I just wanted to go over some of the data from this most recent quarterly results and earnings call, share what my takeaways were. Hopefully you guys down in the comments can let me know what your takeaways were. By the way, if you are interested in seeing more Tesla content from me, let me know down in the comments. I'm not too sure if I'll continue covering it going forward or focus more on the space stocks, mix in a bit of both. Not too sure. Let me know if you're open to more Tesla content from me, though. Now let's continue on with the stock. So starting off with the stock price, obviously amazing day for Tesla today. We had the stock up about 10%, whereas the NASDAQ was only up 0.2%, so obviously massive outperformance. Obviously, most shareholders out there were very happy with the results. I was a little worried going into this quarter, I'm not going to lie. I thought maybe Bitcoin impairments from their Bitcoin holdings going down in value, as well as, I know everyone knew the Shanghai factory was shut down, but I thought maybe some analysts wouldn't have revised their expectations and therefore it would show as a miss on their numbers, even though, we know that they performed all fairly well. Having said that, we did have a big beat, so that was obviously very nice to see. My own portfolio has been seeing a lot of red over the last year, so definitely nice to see some green over the past couple days. Today, Tesla, yesterday, Rocket Lab had a good day as well. Just wanted to show this little wedge setup that I noticed a couple days ago on Tesla. So as you can see, we're kind of within two bands here in terms of a price range that was tightening and tightening. And when you see this kind of a wedge setup, usually it's a good sign. The stock's going to move in a big way, one way or the other, when it does break out. So there was no certainty for sure which way it was going to go, but I was getting reasonably confident that we were going to see a pretty big move, and I still think we could see fairly large move going forward now that we're out of the current price range. We'll have to see what kind of levels it reestablishes at. But I actually was thinking a couple days ago, because I am a Tesla bull, obviously, of potentially doing some sort of an option spread trade where I could sort of limit my downside and do a trade for the upside call option. But I didn't end up doing it mostly because I'm not really usually a short-term trader. I'm usually more of a long-term guy who occasionally dabbles in the short-term stuff, mostly for fun because, I got a kick out of it sometimes, I'm not going to lie. Didn't really have a ton of funds right now available and didn't end up doing it. Kind of wish I had now, obviously. And but still, you can't be too upset holding the stock, holding a lot of shares, or having a good move. So With the stock out of the way, let's go to some charts I wanted to share with you guys. Now, these are from Hypercharts. If you haven't checked out that website before, I highly recommend you check it out. It's a great site. They chart a lot of stock statistics, really helpful for kind of visualizing the data. I could just pull up a spreadsheet for you, but I think for this kind of format, it's easier to visualize if we show the charts. So, vehicles delivered. Now, of course, we are down quarter over quarter. This is a quarterly chart, by the way, not annual. But this was fully expected because of the Shanghai factory shutdown. They had to shut down for quite a long time because of China's no COVID policy. Shanghai is by far their biggest factory, so this was a huge blow. But, I mean, despite this shutdown, it's still not bad. We still hit about 254,700 vehicles delivered. So, not bad numbers. If you go back and look year over year, it's still pretty good. Still got growth. So even though quarter over quarter it slowed, we all know this is temporary and things are going to pick up again. Continuing on now to the revenue, we can see a few things here. Obviously, once again, it slowed as we expect with the vehicle deliveries. A few nice things, though, is that the services and other segment, we're seeing a bit of an uptick on it lately, which is really nice to see because it had been, unprofitable for a while there. And still would like to see energy pick up a bit more, but I feel like it's starting to move in the right direction, as we'll see a bit later with the information on Tesla Solar. Next up, we have the revenue and operating income. Always good to look at both the top line and the bottom line clearly. So by the way, how impressive is this chart? If you zoom out, massive growth on the top line, and of course it's being reflected on the bottom line with gross profit and then operating profit. Of course, it was hit once again. If you have a massive factory and all this equipment, all these employees not doing any work because you're forced to shut down, of course that's going to hit the bottom line, right? So we did take a hit to our operating income and our gross profit, but it's not that bad, especially when you factor in the fact that we're launching 2 new factories and ramping them up. So obviously, while we're ramping up these factories, our margins there and our costs are not going to be great. Moving on to operating expenses, we did have some extra expenses here in green. Falls under other OPEX, but that's basically for the layoffs that they did, as well as some of those Bitcoin charges, and we'll get into the Bitcoin a bit later. Other than that, though, it seems like they're controlling their expenses pretty well. We second quarter in a row of lower expenses, nice to see, and the SG&A has fallen nicely over the past couple quarters, which is what I'm really looking for. I've said before, I don't mind too much if R&D is high, especially in a company like Tesla or Rocket Lab, because it means they're putting that money towards future growth. SG&A, on the other hand, I like to see it as lean as possible, and nice to see that they're kind of doing pretty well there, I think. Next up, we had some discussion about future products. So sounds like finally they will be delivering Cybertrucks by around mid next year. Hopefully, if it's not delayed once again. I know we've all been waiting for it for ages. Elon said it may be their best product yet. No real surprise that he would try to hype it up, but I think he's honest about it, and there's all sorts of brand new technology going in there in terms of castings and how they make it. I do think we'll see a price increase from where it was originally announced, just because there's been so much inflation, prices rising, but I can't wait to see one of these things on the road. I think it's going to be wild. I've never seen one in person yet, but I've seen all the videos, obviously, but just watching one of those things rolling down the road, especially if you're with someone who never saw any of the presentations, I think the first time they see it, it'll just be like something out of a Terminator movie, and they'll just be completely shocked. So I'm really looking forward to that, excited to see that new product. And they've already got so many pre-orders that it should be a big success, I think. Next up, there was some talk about Bitcoin. So a bit of a surprise was they actually sold the majority of their Bitcoin position. Wasn't expecting that. And it was overall for a loss. I mean, if you just look how Bitcoin's done the past year or so, how could it not have been for a loss, right? But The reason they did that was because they were a little worried with Shanghai being shut down and their money situation. I can understand being a little concerned. Your biggest factory is being forced to shut down by the government. You don't know how long they're going to force it to shut down for. So you might want as much cash as possible available to get you through those times. Therefore, they sold it. It did hit the profit and loss column to the tune of 106 million to the negative side. But they are still open to adding more Bitcoin in the future. This isn't something where they've decided they're anti-crypto or anti-Bitcoin. They've not given up on the area. It was just kind of a situation that arose where they wanted more cash available should they need it. And I can't really blame them on that one, although it is a little bit sad to see buying high and selling low like this. But it's really pennies compared to the main business, which is what I think we should all focus on most heavily. Tesla Solar finally saw some good results here. It was the highest solar volume in years. We can see the little chart line deployed. Solar deployed hit 106 megawatts, which is significantly higher than the 48 we saw last quarter, and we've kind of been floating around mid-80s prior to that, so nice to see some growth finally there. There was a report that they stopped scheduling solar roof installations across most of the United States, shifting installers to solar panels instead of solar roof. So could be supply issues there, probably supply issues. Hope to see solar roof scale rapidly in the coming years. I will say solar roof in particular has been a bit of a disappointment to me as a Tesla shareholder. I really expected big things from it a few years ago. It just hasn't really kept pace with the auto business. I think it's kind of understandable because, every roof is different and it can be hard to train installers to install the solar tiles. Tesla's not out there doing roofs themselves. It's contractors that do that work, have to be trained, have to set up a specific roof for every individual house. I think a new strategy of focusing on new builds is likely to bear fruit. If you have a new build where every roof is the exact same, maybe a lot easier to just pound out those solar roofs one after another. Margins. So as we can see, it's a little zoomed out here. Margins did take a hit, not unexpected. A few reasons for that. Obviously, we had the shutdown in Shanghai, as I mentioned, so factory still paid for, no output from it for a while there. But also, vehicles from Berlin and Austin are now hitting the cost of goods sold column, so this affects margins for all vehicles overall. So you've paid, obviously while you're ramping, it's very expensive. The vehicles don't really become profitable or efficient until you hit larger scales. So the vehicles from Berlin and Austin, as they're ramping up, are costing a lot more than they're probably selling for at this point, and that's hitting margins. However, we all know this is temporary. Very excited for Q3 and Q4, I think, as Berlin and Austin ramp more, and Shanghai is hopefully back online for the entire rest of the year. We could be looking at some really great quarters, some outstanding production, and hopefully those margins will improve as these factories ramp up. So, talking about production now, they mentioned that they're still shooting for 50% year-over-year production increase. It's going to be tough, but they think they might be able to do it, so I really hope they do. Now, if you look at the numbers, that actually means that they'll have to average 420,000 vehicles per quarter for the next 2 quarters of the year in order to hit that rate. And if we can see the chart, we're looking at around previous highs of like 300,000 or so, 350, not even 350, 300,000 and a bit. So if you hit 420,000 per quarter for the next 2 quarters, we're looking like up here in the chart. That is massive growth, extremely exciting. They did mention that they hit their highest production rate ever out of Fremont, and I believe Shanghai did hit it as well in June. So they're fully back and up and running, and I think we could see some really great stuff over the next 2 quarters. 4680 cells, there was some discussion on that. It was mentioned that they feel it is an A plus type architecture. Right now they're getting kind of a C performance out of it. Still a lot of room to improve, but still already outperforming their old 2170s. They're looking to hopefully produce 1,000 per week well before the end of the year from Austin. So it's kind of just ramping up right now in Austin. It's a bit of a slower, difficult process ramping up those new battery cell production lines. Their Cato Road facility over in California, I believe that is, has now fully automated their dry out electrode process, which led to major improvements to production. So output from this factory, it has been up 35% each month since the start of March, which is really great to see. Massive output improvements from Cato Road, and hopefully they can just roll these new processes into Austin and get it up and running soon. So they're aiming for Austin, Texas to be able to exceed the Cato Road facility by the end of the year in terms of 4680 cell production. I really hope they are able to do that as well. Now, FSD is probably the most exciting for me right now. I'm not going to lie, just in terms of future looking as a shareholder of the company. They are still targeting a FSD beta wide rollout by the end of the year. I really hope this happens. There's also some talk that if they can get regulatory approval, they would roll that out in Europe and globally as well. There's another price increase coming, probably in line with these wider rollouts. And there's going to be a lot more information on AI Day, which I'm really looking forward to hearing more. But as we can see down below, cumulative miles driven with FSD beta, ever since they've kind of opened up the beta, it's really taken off. This is in the millions, by the way, so we're looking at 35 million miles driven with FSD beta. That's a lot of great data for the team. And obviously, we all want robo-taxis to succeed one day. I think we all understand that if they do solve robo-taxis, it's just a cash printer. It's absolutely massive. But I think if we roll out FSD beta across the entire world, where anyone can get FSD, basically they can use it on city streets, I'm really hoping we can see a little bit of an uptick in the take rate on this, or the percentage of people that purchase this option. Because if you really think about it, like say 15,000, 17,000 maybe even dollars of pure software revenue that just flows straight to the bottom line, because they've already made the investments to develop FSD. So whether 10,000 or 20,000 people buy it, it really doesn't make any difference to them in terms of how much money they've put into this. So if we get larger take rates on full self-driving in the coming years, that could just be absolutely massive to margins. It could make them so much money. Potentially, even without robo-taxis, it could make them a lot of money. So I really hope this doesn't get pushed back again. I know Elon has kind of infamously said, FSD will be complete by the end of the year. I think he said that the past 3 years. Of course, he's still saying that this year, and I really hope this comes to fruition. I do have confidence that it will eventually. And I have seen videos suggesting that, people are seeing improvements out on the road. If you do happen to have FSD beta, let me know down in the comments. Are you finding it any better? Do you think it's ready for the general public to get access to it? Or is that going to be a bit of a disaster of people using it improperly, us seeing bad news stories, all sorts of accidents? Let me know what you think. But this is really the biggest part of the bull thesis for me, FSD, as they are ramping up production here to more and more capacity, looking at, easily 1 million plus per year. Even 1% of those, if you're talking about a software package worth $15,000, we're talking about a lot of money. So really, really excited about the FSD, really looking forward to AI Day in the future. How do I feel? I'm glad we're moving up. I'm glad to see the green. I think the future looks bright. I'm holding over the long term. If it does happen to drop below 700, I may buy more. But to be honest, it's a very big position in my portfolio already. I've been holding since 2018-ish, maybe 2017. So obviously I've seen some great returns, and that's reflected in the size of the position in my portfolio. I even added more relatively recently as I became more bullish on the company. So yeah, if it drops back down below 700, I may buy more. If not, like, I'm very comfortable with the size of my position. That's it for today, guys. I hope if you found this video interesting, you'll hit like and subscribe down below. It'll really help out the channel, and I'll see you next time. Bye.